Power restrictions in China are doing wonders for the price of aluminum, which at $2,450 a ton remains within sight of its 10-year high of $2,750 per t set in 2011 and getting closer to its all-time high of $3,000 per t reached in 2008. Once dubbed congealed electricity, thanks to the heavy use of electric power in its three-stage production process from bauxite ore to alumina and then to the major electricity use in smelting into metal, aluminum is also benefiting from the near-record copper price. The connection between copper and aluminum is that in some uses, such as power lines, they are interchangeable with the swap ratio generally seen as 3:1. That is when copper is 3 times more expensive than aluminum, a change becomes financially attractive. Right now, with copper a shade under $10,000 a ton, the ratio is roughly 4:1, which is good news for aluminum producers such as Alcoa, which has seen its share price more than double since late January when it was trading at $18 to last sales in New York at $38.62. Substitution is, however, one of the lesser drivers in the price of aluminum, with the biggest effects being strong global growth and problems in China, where there's a tussle underway between limiting pollution from heavy industries such as steel and aluminum production and boosting electricity production to meet strong local demand. Even with the attacks on chronic environmental pollution, China's aluminum industry is expanding, with Morgan Stanley, an investment bank, noting in a research report earlier this week that metal production had grown by 8% in the 12 months to date, with an estimated 4 million tons of annual capacity added and another 800,000 tons of mothballed capacity restarted. Some capacity still in mothballs offset against the expansion is the inability of another 1.1 meters t of smelting capacity to restart because of restrictions caused by power shortages, a key factor in driving the worldwide aluminum market into deficit. Along with low rainfall in the catchment areas of hydroelectric dams, there is a China-wide shortage of coal for power generation, a curious state of affairs given that there are coal carriers fully laden with Australian coal sitting at anchor off Chinese ports but banned from unloading because of a trade spat between the two countries. Morgan Stanley said that in April hydroelectricity was 11% below 2019 levels in Yunnan province, a major energy exporter to the rest of China, as well as being the site of a big expansion in aluminum production, with 3 smelters in 2019 expanding to 8 today. Guangxi, Shandon, Sichuan, Jiangsu, Zhejiang and Guangdong are also impacted by power shortages, Morgan Stanley said. The bank said that in the near term, the impact of China's power shortfall would extend to the global market through China's need to import between 100,000 and -200,000 tons of aluminum a month.